Welcome everybody to FinTech North's first webinar in a couple of years. We're asking if digital assets are the next generation of finance. We did so many of these a couple of years ago, so it's great to return to a virtual format where we can bring everybody together in one place. So I'll just give it 30 seconds or so for a few people to arrive into the webinar, and then we'll get going. So yeah, speak to you all shortly. So I'll get us going now, guys. I just want to say a few words of thanks, really, to GFT. GFT have been fantastic partners of ours over the past, couple of years, actually. Recently supported our record-breaking Manchester conference a couple of weeks ago, and we're delighted to be working with GFT once again on this webinar. I know digital assets are a real hot topic amongst our community, and we've had over 200 registrations for this webinar, so very much proves that it's a topic of interest for everybody. So yeah, I just want to say a huge thanks to Tim, to Dawn, to Ash and the team at GFT for their wonderful support. It's great to be working with you guys once again on this one. So I'm Joe, I'm Engagement Manager at FinTech North, and I just thought I'd take a few minutes just to explain a little bit about the work that we do supporting FinTech in the north of England, and give you an idea of what the landscape looks like in the north as well for those who haven't joined a FinTech North event before. Primarily, FinTech North exists to bring together the northern FinTech community. We also exist to develop the sector in the north, so supporting our entrepreneurs and our startups and scale-ups with profile opportunities at our events and also within our wider network. We're here to make sure that all of that development aligns with what's going on a national stage as well and doesn't take place in silos across the north of England. We very much see ourselves as the conduit between the regional and the national within the UK FinTech ecosystem. And I think finally, the most important thing to note there is that we do all of that in a neutral way. So we don't promote any one geography or any city as the capital of FinTech in the north. We try and promote the north of England as one region so that we can differentiate ourselves and compete on an international stage. All of that stuff's quite big picture, but I think this infographic brings it all together. Primarily this is all about bringing people together to build connections, to build relationships. I think the key thing to highlight here is we're entirely self-funded as well. So just a little point to anybody interested in working with FinTech North, we can support your business development objectives and align with your business strategy. So please do get in touch, because we really need the support of like-minded organizations to come on board and take a partnership or a sponsorship. And on that note, here's some of our wonderful partners, including GFT. Just wanted to kind of put this on screen to highlight that we work with organizations of all shapes and sizes, from early stage startups and scale ups right through to instantly recognizable financial services brands. We can support you whatever stage you're at. Just really quickly, just to talk about what's going on in the north of England. There's probably around 400 FinTech firms across the north as a whole. And as you can see from this map, that's everything north of Sheffield and south of Scotland to us, just for the avoidance of any doubt. FinTech in the north is probably generating around 2 billion GVA every year for the UK economy. And we see some regional specialisms and strengths emerging. And I'll just take you through those really quickly if I just go from west to east. In the Liverpool City region, there's a real strength in asset management and wealth tech. In Manchester and Greater Manchester, there's a real strength in payments and e-commerce. Over the Pennines in Leeds, there's a real strength in banking and lending. And up in the northeast of England, there's a bit of an innovation corridor between Newcastle and Durham, and there's an emerging specialism in payments in the northeast as well, which is really strong and great to see. So I'll bring it to a close there. Hopefully that gives you an idea of what we're all about as an organisation, and what's kind of going on in the north of England in terms of our FinTech economy. It's really vibrant. That's 400 FinTechs out of about 2,500 FinTechs as a whole in the UK. So it's a both economically and geographically vast area, and there's loads going on, and that's what we're all about as an organisation, shining a light on all of that innovation. So I'll bring my presentation to a close there, and I'll ask our first speaker, Ash, to kind of take to the virtual stage to come on screen and tell us a little bit about GFT and set the scene for us, please, Ash, if you don't mind.
Thanks, Joe. Thanks for the introduction. Let me just share quickly. First of all, thanks everyone for taking the time and joining this webinar. Today, we want to touch base on digital assets. Myself, Ashutosh Chauhan, I work with GFT as a principal consultant. I have some background in digital assets, specifically in blockchain and DLT. And today I'm delighted to have 4 panelists in today's webinar. GFT is mainly a consulting firm and has been doing a lot of work around platform services, digital transformation related projects, and also heavily involved in smart technologies as well. Sector-wise, we have been focused in banking and also a lot of work in insurance as well. Apart from these 2 sectors, we also do work in other industry as well. Totally, we are 10,000 plus specialists around the globe, and we are based in more than 15 locations. And GFT has been in the business for more than 35 years. I must remind that some of the banks which we are working on is presented on this screen, but we are not just limited to these number. There are a lot of other banks which we work with, which are not presented here because of, I think, compliance issues. And for today, because the focus would be more on the DLT projects, so I'll just give you a brief about GFT, what we have been doing in this space. Our journey goes back as back as to 2015, when we started doing the POCs in the blockchain and DLT space. We have done number of projects and touch based on different use cases, whether it is building a new crypto bank or doing a tokenization of assets. And recently, we also participate in POC, which involved UDPN, which is the latest protocol, which is much needed in the DLT space. So if you want to divide that into 3 categories, so we have been in DLT and tokenization, we have been in digital assets and crypto, and we have been in the e-money and payments space. From jurisdiction-wise, we have done lots of projects in UK and mainland Europe, but also a lot of other projects have been going on in the Far East as well. We have team based in UK, mainland Europe, and Brazil, and other part of North America as well. From technology point of view, we have partnerships with Digital Asset, R3 Coda, Custodigit, and Google. But this presentation shows you some of the platform we have been working with, like Ethereum, Coda, Quorum, Hyperledger, Daml, but we are not just limited to these technology. We also pursue other new technologies in this space. In this webinar today, you might hear terms DLT, blockchain, and Web3. DLT is a broader term which describes the distributed ledger technology. Blockchain is a subset of DLT, and we might, in this webinar, we might use these 2 terms interchangeably. Web3 is touted to be the new state of the web. If current internet or web, which we see today, is considered as a Web 2, then Web 3 is the new version, where much more focus on decentralization of the technology. With this, thank you for listening. And we have 4 panelists today. We have Elisa Kong from JP Morgan, who works with Onyx program. And we have Prashant Malik, who works with HSBC Markets and Securities. We have Sam Wicks from Google, and we have Georg Schneider from Digital Asset. Without any further ado, I would probably ask our panelists to come and maybe brief, give a little bit of brief about themselves. So, Georg, do you want to go first?
Yeah, sure. Hi, everyone. It's great to be here. My name is Georg Schneider. I work for Digital Asset out of Zurich. I lead the financial engineering team here. So yeah, we're a technology provider for the financial industry, providing our ledger technology Canton, as well as our smart contract framework DAMO. And yeah, we work with our customers to really build new infrastructure for the financial industry using this new technology and leveraging it to provide concrete business value. Thank you.
Thank you. Thanks. Sam is on next on my screen. So Sam, I would ask you to introduce yourself.
Thanks. Hi, everyone. I'm Sam Weeks from Google Cloud, based in the UK. I'm in a specialist team called Emerging Trends and Technology. And within there, I am the Web3 lead. So my job is to speak to Google Cloud customers, users across all industries, actually, help them, bring their Web3 use cases and solutions to life using Google Cloud and some of the Google Cloud products that we have.
Thanks, Sam. Alisa, do you want to go next?
Yes, hi everyone, I'm Alisa Kong, and I've been in JP Morgan now for over 8 years, also based in the UK. I spent a lot of my time in JP Morgan initially in the security services post-trade space, and towards the tail end discovered blockchain technology, basically became very fascinated by it and decided to move into the Onyx team within JP Morgan, where we're focused on building enterprise solutions using blockchain technology. And currently I am the product manager in the JP Morgan Coin Systems team.
Thanks, Alisa. Prashant, do you want to go next? Thanks.
Hi, everyone. Prashant Malik. I am a senior technology lead for digital assets and currencies in markets and security services business of HSBC. So I look after building of our platforms which use DLT, so our digital assets platforms, and doing POCs, experiments with DLT, and also look after the tech strategy for digital assets technology.
Thanks, Prashant. For all our listeners today, we would, during the webinar, we would present some poll questions, or if you want to ask your questions, please utilize the chat or Q&A, and our panelists would be keen to take on those questions as well. Okay, so probably I would start this discussion, Prashant, from you. Could you brief us what kind of projects specifically you are part of? And yeah, we take it from there.
So we have been sort of working on multiple projects, and our journey of working on digital assets projects goes way back sort of 2016-17, when we started with very small scale experiments such as testing proxy voting on blockchain, and then we followed that with another number of series of POCs and experiments. So our first platform, our first solution, which went live, was way back in 2018, where we basically went live with our FX Everywhere solution, which is a post-trade matching, confirmation, and cross-border payment solution via DLT. So basically, it's a payment orchestration solution for intraco and external cross-border settlement of FX trades. And since then, we have worked on a number of initiatives. More recently, last year in 2022, we started working on our bond tokenization platform that's called HSBC Orion. And we also started working on tokenizing physical assets, starting with commodities. And this year we basically went live with Orion. So we tokenized we basically issued on-chain native issuance of EIB bond. This is the first Sterling bond issued on blockchain. And then we also went live with the tokenization of gold. So the tokens are basically backed by physical gold. And then we also announced this year about us building our digital assets custody platform. So basically, that's a service. We also have a custody business, so HSBC Security Services. So we do provide custody services to our clients, and sort of foraying into the digital assets custody space, will help our clients to sort of own digital assets, and we can provide custody for that.
And for our listeners, I would like to ask this question, which is like you tokenize bond or actual physical asset as well. What kind of value does it bring for the business, and what kind of value does it bring for the customers, your customers?
So tokenization in itself is a quite powerful concept, because what you're doing is, you are fractionalizing the assets and digitizing it on the distributed ledger. So you see more benefits of fractionalizing and digitizing it for assets which traditionally are illiquid or semi-liquid. So with that, what you then do is an asset is tokenized on the chain. You facilitate the trading of that asset much more easily. So and then of course, from accessibility point of view, the assets which were previously not available to certain customer segments, now you have fractionalized it. You have reduced the ticket size. So a lot more customers can now invest or own those digital assets, which they were previously not able to. And these are basically digital ownership of assets. So basically either new products or new variations of the products, or digital versions of the products which already existed. Now, the other benefits of tokenization is that the efficiency gains. So you have it on the ledger, so it's secure, it's transparent because the ledger is immutable. So you can now tokenize assets, as I mentioned, like bond, gold, or even, let's say, real estate, but you could also tokenize your money. So now you have digital form of money, digital form of assets, and there are jurisdictions which basically allow us to sort of exchange that and do a transaction. So if, let's say, I have tokens which represent digital bonds, and I transfer it to another account on the blockchain or DLT, certain regulations do recognize that equivalent to title transfer, right? So with tokens, now you have assets readily available on chain, payments readily available on chain, and you can instantly swap those money tokens with asset tokens. So in traditional sense, there is something called as DVP, delivery versus payment, which basically means that you're buying or selling assets through payment of against the assets. So that DVP process is now digital DVP, digital delivery, digital payment. And that brings in a lot of efficiency. What you would normally be doing in a matter of multiple days, technically can be done instantly. And we are already seeing that happening in the tokenization space, or rather enabled by tokenization.
So is it fair to say that by doing this tokenization of those assets, we're bringing in more liquidity into the space, and also exposing into opening more opportunities for the customers who were previously not able to participate in these instruments? And last bit which you mentioned is that digitalization of the whole value chain.
Absolutely. And there's a wide variety of assets which can be tokenized. So as I mentioned, we did the tokenization of gold. So, and of course, there's a lot of, when we talk about blockchain, there's mention of crypto as well. But digital assets also include, tokenization of securities as well, and other assets such as gold. So there is a wide variety, and there are assets which are now available through tokenization. So if a fund or an investor wants to sort of have a safe ramp on to ownership of digital assets, there are options available. Less volatile assets are also tokenized.
I would like to thanks Prashant. I would like to bring in Alisa into the discussion, since you are in Onyx program, involved in settlements and tokenization as well. Do you have any additional views what Prashant has mentioned here?
Yeah, no, I think I love that Prashant has done a really good introduction, introducing the benefits of tokenization, and also talked a lot about that tokenization of the asset leg, but then you also have the cash leg on the blockchain. So you have that enablement of the delivery versus payment through, I guess, what some people also call it in the industry, atomic settlement. And that's what we're also seeing in JP Morgan, specifically in Onyx, where the way we sort of think about the blockchain technology, we realized quite early on that it has that potential to re-architect the way information, asset, and value moves. So we also took that approach where we mirrored ourselves to that reality, where we focused on a network that is looking at information exchange, and some examples there. You can do global account validation on Link. We also have, I think, along the similar veins of what Prashant mentioned, we have an Onyx digital asset platform, where in terms of the tokenization possibilities, we enable this live application today called intraday repo, which historically has not been possible because of the delays in cash settlement. And then we also have in-coin systems where I'm in. That's where we use the blockchain technology, where we offer blockchain-based deposit accounts. So that really answers that cash leg for the asset leg. And that's where, I think not only does it open up, new products, but it also enables money to move 24/7, where we think historically money doesn't move 24/7. You have cutoff times, public holidays, and having this new technology substrate also opens us up to some of the benefits there.
Okay, thanks, Alisa. In order to form that network, does that mean that you require more banks to participate in that network?
Yeah. So I would say we see it as an evolution. So with JP Morgan Coin Systems, we really started the journey through the lens of a single bank. So effectively, the ledger is within JP Morgan, and clients are able to move money on a 24/7 basis with each other within JP Morgan. But I would say we also see that evolution of cash on blockchain infrastructures through different ledger designs. So the next evolution that we see there is what we call a shared ledger. And that's where we're expanding that view from what we call a single bank environment to a shared ledger environment, recognizing that multiple participants want to interact with each other, but use common standards on the same network. So that's also something that we've started building on our side. We have a independent settlement clearing platform called Partior that we backed along with a number of other banks in the industry. And that's where it's essentially offers this peer-to-peer network where you can have payment versus payment or delivery versus payment use cases. You can have the potential to integrate with central bank digital currencies in the future, traditional payment rails, real-time payment rails. So that's where we see that evolution where multiple different entities can join this Partior network, including ourselves, to be able to settle cross-border instantly.
Okay, thank you. I would now, I will come back to you, both of you, in some time. But before that, I would just want to jump onto Gog. In terms of Gog, your offerings from digital asset, what are the specific offerings related to tokenization and settlements?
Yeah, so our technology stack is essentially made up of three main components, being with Canton being the underlying ledger. So that's a layer one blockchain specifically designed with privacy and composability in mind. So the aforementioned DVP use case is sort of the canonical one. On top of that, there is the DAMO programming framework. That's your smart contract language used to design the workflows and data that is part of the business processes that are being built on DAMO. And then specifically in the context of tokenization, we provide an offering called DAMO Finance on top. That's been built out of my team, and that is really your sort of one-stop shop for all things tokenization. There's different aspects to of course, to tokenizing assets, the ones that have been mentioned around moving assets around, transferring ownership. That's the very bottom, but there is much more to tokenization than just that, right? To really capture the full value that you want to get out of it, you need to move into other areas, like managing the life cycle of those products. And that's also where large parts of the complexity of existing businesses lie. So DAMO Finance provides you essentially the full range of the asset value chain that you can put onto a ledger and therefore manage that process more efficiently. All of these processes around not just settlement, but also asset servicing, corporate actions, these are all inherently multi-party processes where the data and the business has to be synchronized across a potentially large number of individuals or firms. And that's the inherent problem that this distributed ledger technology solves, right? So yeah, those are pretty much the components that our customers build their solutions with. And of course, we do assist them along the way, because it's a new technology for almost everyone. And we're all trying to figure out, how do we best solve for the problems that exist in the industry today.
Okay, thank you. Thanks, so. Prashant, I want to come back to you. Say you have, you have been part of those projects. What are the challenges do you see in implementation of those projects? What I mean is, like, can we say that the infrastructure and tooling is in place for a project to go live in this space if I decide to build a new project today?
So I would say that, the topic is TLT, which is basically technology, but I would say that it's not just about technology. It's so in an enterprise setting, when you are working on building a platform or other digital assets initiative, it's a massive collaboration effort. So when you basically tokenize or issue an asset on chain, so you've got a product lifecycle. So in the product lifecycle, you are moving bits of your product lifecycle or the whole product lifecycle on chain. And you're not just doing that, you're basically shifting risk on chain, you're shifting business processes on chain, and that means there is implications from legal side, regulatory side, compliance side, business operations side, cybersecurity wise as well. So what we see is that they say often we find ourselves on the sort of discussing it on the whiteboard. So what that basically bit of business process or the piece of product lifecycle is actually doing. So go back to the basics and then understand, while we digitize this and move it on chain, what does that really mean? So in short, I think it's a massive collaboration effort across various functions within an enterprise to basically move an asset or issue a new asset on blockchain. And then there's a lot of engagement with regulators as well. So it's paramount that regulators feel comfortable with what we are doing. And alongside what comes is integration with the existing systems, the existing traditional finance processes, and basically making ourselves ready for moving into a digital or releasing or going live with a digital product. And that's not easy sometimes, because there are a lot of legacy systems in an enterprise, and often we find that that the velocity of the pace at which a system which is on blockchain moves won't be same as a traditional system. So not only is the space, i.e. the velocity, but also the level of automation you would see. So on a blockchain, you can write a lot of business rules, etc., and you can sort of automate a lot of things in your smart contracts. Whereas in legacy, that may not always be the case. More specifically on the technology side, I think because it's a massively evolving area, so the challenge is that you need to be sort of be constantly reviewing your architecture so you are future ready. So as an example, I would say is that if you're tokenizing certain asset and you're, for example, currently using fiat payments to settle that, so you can tokenize that, that's fine. You can still do DVP, digital DVP, but from architecture point of view, I need to sort of look out for the developments in that area. So for example, on-chain payment method, CBDC. So keeping your architecture future-proof and making sure you understand what's going on in that space, that's a challenge as well. And since I mentioned about custody, and we have a custody business, so now we have digital assets and we already have traditional assets. So as a custodian, our clients will demand for a unified statement of digital assets and traditional assets. So bringing them all together, they may be sitting at in various locations. So bringing them all together, doing a single statement, I think that's also sort of a challenge in integrating and building a common view or integrated view.
Yeah, and I'd like to jump in here and definitely
please.
Some of the thoughts that Prashant mentioned in terms of being in a large enterprise organization, in terms of having a lot of legacy infrastructures that you work with, having large teams and stakeholders that we interact with, not only internally but also externally with regulators. And that pace of how fast we want to move may not necessarily be at the same speed as a fintech or a startup. But I think also to add to what Prashant had mentioned, it's also the understanding, right, of this new technology, understanding and really simplifying what it is, what it isn't, what it offers. Really going to the root of the benefits that clients can bring and companies can take from, right? Because I think at the end of the day, you can use technology A, B, or C, but you want to make sure that you're having more efficient processes, you're having less manual errors, being able to manage more complex rules. And I think that's where we really see client adoption through really understanding what that product is and being on the journey with them.
Thanks, Alicia. That's pretty good. In the meantime, I think Sam has moved out of the building because there was a fire alarm. But I think at least all of us get to see blue sky, which is a rare thing in UK during this time. So you found yourself a good spot there. Joe, do you want to ask one of the poll question we have for the audience? Shall we take time just to, here it appears. It would be great if you can participate in this question. It would really help us understand. So question on your screen is, how would you rate the importance of DLT in the future of finance? Options are extremely important, moderately important, neutral, slightly important, not all important at all. Okay. So Joe, what happens after everyone has participated in this poll? Would you share the result in the chat, or do you want me to pick this up?
Yeah, I can see that we've got about 60% of people have completed the poll so far, and the vast majority of people view it as extremely important or moderately important. So yeah, 61% of people are saying it's extremely important, and 32% of people saying moderately important. Just 3 people think it's neutral, and nobody thinks it's slightly or not important at all.
Okay, thank you. Thanks, Joe. Thank you. I want to come back to you on the network, Canton network, which you mentioned. Do you want to, what kind of use cases are you seeing, and how they are divided among, let's say, public network to the permission network?
Yeah, sure. So our customers have been building applications essentially over the past couple of years. What they've done is essentially they've built up ecosystems on their own within their network, within their customers, and provided applications to them. Earlier this year, we've announced the formation of the Canton network, which is pretty much just bringing all those ecosystems together into one global network, because the problem that has existed in particular for, let's say, the more permission side of things is that all of these use cases have essentially just created larger silos, right? They are applications that function well within the realms of that particular application, but typically they were lacking this interoperability and composability with other applications. And if you're building an asset tokenization platform, but you can't compose it with a cash platform coming from a different provider, then you're very limited in the value that you're getting out of it. So our plans with the Canton network is really to bring all those use cases and applications that exist today in the Canton network together and form the right connections where it makes sense. So, for example, to bring an asset tokenization platform together with digital cash, as for example the Onyx platform, because really that's where you start to see really network effects form, and that's where you see large parts of the promised efficiency of tokenized assets in general to come into reality. And yeah, so the way to think about the Canton network is to some extent bridging this what I believe is a bit of a false dichotomy between public chains and private chains. What it boils down to is what are the requirements for the system or the platform that you're operating in, right? And what we've seen with our customers is that there are certain use cases where a public blockchain perfectly fulfills those requirements, right? If you want to do a loyalty token for an aircraft or a carrier, or you want to do sort of a community token where retail investors and holders are perfectly fine for these positions to be out in the open and to be visible to everyone, then public blockchain is perfectly fine. In other cases, in particular, if we're talking about regulated finance, those requirements look very different, right? And typically, there are strong requirements around the privacy of things that happen on the ledger, and also about control. So, regulated financial infrastructure would never kind of put their fate into a set of unknown third-party validators, as you often have in the public chain space. So they have a different set of requirements, right? But what they would also, in this sort of more controlled environment, would be wanting to benefit from is that seamless composability that we've seen in the public blockchains work quite well. So what we're trying to strike is sort of the middle ground here for anyone that's operating an application, to give them exactly the control and the privacy properties that they need to operate within their regulatory perimeter, but also allowing them to connect into other applications and other ecosystems to really create the network effect that I've mentioned earlier. So that's where we see kind of the Canton network fit in. and that's what we're working on with our customers right now.
Oh, thank you. I would go back to Elisa now, and I would like to know, on behalf of our audience, can we say that are we still in POC pilot phase, or there are some live projects which you want to mention?
Yeah, no, good question. And, I think all the initiatives that I mentioned earlier within Onyx, right, within the three stripes and also in Coin Systems, we are not R&D, we're not a innovation project. We are actually a production grade business. And in Coin Systems alone, so we've been live for over 2 years now. We are processing billions of, helping our clients process billions of dollars on a monthly basis. So, that's a true testament to that client adoption that we are starting to see in the market. We do have, I wouldn't call it so much more of a development in-house, right? Where in Coin Systems, we are starting to think about what's next for payments, and especially when we talk about tokenization, because what we offer today, our live product, JP Morgan Coin, it's really a traditional account form that everyone on the panel would be familiar with, except that we've used blockchain technology. And that allows us to provide certain benefits to clients. But we also recognize that commercial bank money is today's dominant form of money. And so we're starting to think more about how we can increase that transferability and reachability of deposits outside the four walls of a bank. And that's where we're starting to think of the future of money with deposit tokens. We want to break that construct a little bit, and essentially representing deposit accounts in a token form. And that's where that was one pilot that we did a year ago in Singapore under the Monetary Authority of Singapore and Project Guardian, where we had piloted that issuance of a Singapore dollar deposit token in an FX transaction with SBI on a Polygon public blockchain. And, I think also, again, York's comments around, you have this public and private chains, and depending on the use cases, that makes sense. But, where we did the pilot on the public blockchain, you can still do that, but regulated institutions need to use controls to create this trust environment. So when we did the pilot, we ensured that the tokens and protocols were designed in a way to restrict unknown parties from being part of the transaction. And, we've shown that there are methods for regulated institutions to interact on public blockchains for peer-to-peer fund movement.
Thank you. Actually, Prashant in his conversation mentioned very good point, which is like when they are developing, they are also keeping an eye on. Just a sec. So Prashant mentioned that they're also keeping an eye on new developments such as CBDCs. So at JP Morgan, are you also, how does your JP Morgan coin fits with CBDCs? Or I would rather ask, like, are you also keeping an eye on the developments on CBDCs?
Yeah, and I think that where we see CBDCs effectively that's being issued at a government level, and I think where we see the potential for interaction is with deposit tokens, right? We still have the use of commercial bank money, and where we see CBDCs potentially coming into play is more so between the banks settling with each other. So that's where we actually see deposit tokens having the potential to interact with CBDCs in future financial infrastructures.
Thank you. Sam, I want to come back to you, or come to you first time. In terms of offerings from Google, what kind of tools and products you are developing to help journey on DLT much more faster?
Yeah. Hi, everyone. Sorry about the very badly timed fire alarm. So thanks. So, I mean, Google Cloud's perspective is to try and be fairly unopinionated, let's say, with what people want to do with financial services, DLT sort of technologies, and just kind of provide quite a low-level technical foundation that enables many different use cases, really. And we're seeing lots of financial services type uses of blockchain on Google Cloud, but we're also seeing loads of other use cases as well. And I think it makes sense for Google to not be super opinionated, really. I think in terms of like what blockchain or Web3 should be, especially given our kind of fairly dominant position in Web2. So we're building some technologies where we think we can accelerate the space that play to our strengths well, and that's with a fundamental sort of infrastructure component for running managed blockchain nodes, which is called Blockchain Node Engine, and then a very fundamental data component as well, which is called blockchain analytics. And our hope is that these will be used to build on top of, and we'll have our partners, GFT amongst others, building solutions that then become very opinionated, sort of directional, use case specific solutions and builds that then get used by whomever should need them.
Thank you. Prashant, I want to come back to you on a point which Gord mentioned, like in regarding Canton and how they're tackling the interoperability. And I guess this would be still a major challenge in this space. Are you guys how you guys are looking at interoperability? Are you seeing the challenges in your implementation for tokenization of bond and gold?
I think interoperability is a challenge for the industry as a whole. So of course we are impacted by that. So one of the from an enterprise perspective, one of the observation one would make is that a lot of implementations have been on permissioned networks. So which basically means that you have now assets which are sitting on these digital islands where and there's a strong need to basically connect them so you can trade them further. You can then use those assets for other purposes such as collateral and lending. So surely it's a core challenge. There are a number of solution approaches around that. So whether that's relay chain, side chain, having a shared network versus having cross chain bridges, and interoperability in itself may mean different things to different people. You could refer it as interoperating between traditional systems and on-chain systems, and within on-chain systems, permission system versus permission system interoperability, because you may have different tech stacks there. So all the rules and protocols may be different. So much that you may have a token which is issued on one platform. You cannot understand that token on the other platform. It's entirely possible. Not that it's prevalent, but it is possible. So basically, the challenge basically is to not only technically solve this, i.e. one of the solution approaches, which may suit to your use case. But then there's also, as I said earlier, it's not just about technology, and that's true in interoperability as well. It's also about semantic interoperability. Your token definitions and standardization is very much needed. And then also around organizational interoperability. So when you have, for example, a firm which is doing issuance, and then that distribution is happening on another chain, then you have, let's say, another organization which is managing the other chain. So you need to have sort of that governance interoperability as well, have clear rules, who is doing what, etc. And of course, there is regulatory and legal interoperability as well. So take a scenario when that value moves across jurisdictions. then all the jurisdictions that are involved in that transaction should have their rules and should have their policies and the rules around that. They should be compatible to enable that interoperability for that transaction.
Thanks, Prashant. There's some poll questions which have been asked by our listeners. If you want to take time, just feel free to answer them. Otherwise, I would probably run through them at the end. I want to probably come back to Elisa again to you, and I want to see what are the use cases you are seeing, not within the JP Morgan, but in the industry. And yeah, thank you.
Yeah, and I have that providing that cash lens, right? We're seeing, I would say, two main use cases in the industry that we see just looking at having the ability to move payments a lot faster is in the treasury and cash management space, and then also the settlement of digital asset space more broadly. So when we think about treasury and cash management flows, because they are straight through payments, they have the benefit of having no cutoff times for transfers. If you have that digital cash element, you're able to move cash a lot more quickly in real time. And then also because you are enabling cash on the blockchain, you can take advantage of smart contracts, which are basically computer programs or protocols, and it allows this concept, that we're starting to see a lot more in the market called programmable payments, where effectively you're able to plug in a set of key conditions to be able to automatically move funds. So you're starting to, see people in the industry explore this shift from a static way of moving money to a more dynamic funding model. So you're seeing that, and that's the first use case. And then I think the second use case is what, I think touches more of what Jorg and Prashant are looking at, and that's really the settlement of digital assets, where you see a combination of pilots that are leveraging traditional payment rails. But, I think where I'm, hoping to see more in the industry having the element of digital cash, you're less limited by some of the challenges that we face today in cross-border payments, and being able to have your cash and assets on the same network. You're able to have that single block atomic settlement. Not necessarily the only way to have atomic settlement, right? You can also have it across where you have different islands where you have the asset in one platform and the cash in the other platform. You're also able to have that atomic settlement concept.
Thank you. So Prashant, I want to come back to you. I know you have to leave in 7 minutes. Do you also see the future of money and payments is cross-border payments being done on the blockchain network and transfer of money and on the blockchain as well, or DLT systems?
So I'll go back to one of the points which I mentioned in the first question, which is, as you have tokenize the assets, they're on chain, and because now you can also tokenize money, whether digital or fiat, you can then now have this great amount of efficiency. Now we do. I would expect that that will continue. More and more assets will be tokenized, and therefore the focus on sort of doing more faster settlements using the DVP, digital DVP, will become more and more prominent. And on payment side, we already are doing a lot of work. So I mentioned about FX Everywhere, which is payment orchestration solution, went live 2018. And I think if I remember correctly, it's multiple trillions of dollars we have settled on that already. And I do expect that, that will continue to further payments. Definitely. We have been, in fact, we have been involved in a couple of pilots and POCs on CBDCs as well. So we I think it was last year probably when we did the POC with Banque de France and basically tested out cross-border payments for CBDC with Banque de France, and digital rupee as well. So wholesale e-rupee pilot, I think that also happened last year. So we were, I believe, the only foreign bank participating in that. So a lot of movement is happening in this space. And also, as I mentioned previously, from an architectural point of view, we are basically making sure that our architecture and our platforms are ready for whenever these digital forms of money are ready for prime time.
Okay, thanks, Prashant. Before I possibly take on any further questions, I would like to ask each one of you, all the panelists, one key question, which is obviously in DLT and blockchain space, we have seen arrival of the crypto long time back, and then arrival of the smart contract. Then the trend started tokenization of the different assets. As well, we did see some POCs back then. And then in the Web3 space specifically, we see arrival of NFTs and then use of NFTs and in metaverse world. And today, like, what's your call? Where the market would go in next, let's say, 2 years, or by end of next year? What other use cases we would see popping up, or end of let's say 2025? So I would ask probably a brief reply from everyone. Prashant, you want to go first?
Sure, thank you. So I would say this, because we are regulated enterprises, much of it depends on, do we see this scaling up? Absolutely. And there will be two key drivers to that, in my opinion. One is sort of a push, and the other is a pull, and both are in the same direction. The push is basically regulatory push. As regulators bring in jurisdictions for more digital asset friendly jurisdiction and regimes, I think that will be a big push and for scalability and increased adoption of digital assets. And then the pull, which is basically technological development. So Elisa mentioned about public chains, which is a great way of distribution. Opens up the availability of digital assets to a large user base. So, for example, things like privacy enhancing technologies and KYC related options on public chains. I think those technological developments will also provide scalability more from the adoption perspective.
Thanks, Prashant. Sam, can I come back to you now on this question?
Yeah, sure. Yeah, I mean, I've got a few comments here. I think I agree with Prashant about public chains as something that we're seeing. Google Cloud at the moment supports only public chains, actually, and I think the engineering team is thinking about, should we support some permission change or stay private? And if people are stay with the public, and maybe people are going to this model where you've got a base well-used public chain, and then you have like a private kind of subnet type pattern on top, using like zero knowledge technologies or something like that to make it secure and private, however it needs to be. Also, I think thinking a little bit wider, that I'm talking to a lot of people about just things like collecting and proving first-party data, right? Especially with like proving, for example, the lineage for a data set, proving which data sets were used to train which machine learning models. So kind of creating a sort of an audit system for machine learning operations and data sharing operations is something that's really, really interesting. I'm seeing a lot of that. And then there's always ongoing conversations, I think, around governance, like digital identities for like states proof of identities, these sorts of technologies, I would really like to see move forward. But of course, things go a bit slower when it's like a state governance type technology.
Thanks, Sam. God, can I come to you now?
Yeah, sure.
Thank
So
you.
I think what the stage that we're at is pretty much building the foundation, right, with asset tokenization, bringing cash on ledger. That already brings some efficiencies and some value. It removes a lot of the risk out of the equation, but that's not the end goal, right? So where I see the industry evolving is really now building these use cases on top that make use of that efficiency that you introduced in the foundational layer. To then provide real, tangible, and large business value. So let me give you an example, right? We're now today in this regime of daily margin calls. Everybody that trades is somehow margined at their clearinghouse or at their prime brokerage, and the risk horizon for this margin is sort of 2 days because you have 1 day of market exposure, and then the next day you would need to unwind or to settle the margin. Now, with those more efficient rails being in place, being able to move assets, collateral, cash much more efficiently, you can actually reduce that horizon and introduce intraday margin cycles, which ultimately frees up a lot of the collateral that's being locked up for margin currently, right? It's trillions of dollars that are just sitting there for the purpose of being able to trade. Now, if you can unlock just a small percentage of that increases volumes, that increases your capital efficiency. So really, I think the large value drivers for DLT as a technology will only become reality over the next couple of years as we build on the foundation that we have today. And the other thing I would mention is that I think right now we're still in a lot of aspects, we're still, I guess, in the experimentation phase, finding out what works, what doesn't, also as a business model in a sense. And we assume out of the myriad of technologies and chains that are available today, that we'll probably see a much narrower set, narrowing down to a much narrower set over the next couple of years to essentially those technologies that provide tangible business value and that are not siloed into their own ecosystems. So that's my take on it.
Yeah, thanks a lot. Alicia, I want to come back to you now on this question. What kind of technologies, trends, or use case we would expect by end of 2024, 2025?
Yeah, no, and I agree with what everyone has said, and the two themes that I, believe will be the focus for the next 2 years is going to be interoperability and client adoption, right? I think this year alone, we've seen this huge shift to the asset tokenization market. We're seeing more assets and commodities being tokenized. And there's been so much focus on the asset leg. But, I think once you have a tokenized asset, there's also going to be a growing need for cash on chain. And then you also have seen a growing number of digital asset networks this year. And, I expect that as we go into the next 2 years, having the, technology and network to support that, and we'll start to see essentially the participants and also the platform owners wanting to find, the most efficient way to be able to settle the cash leg at the same time as the asset leg. So that's where that interoperability piece will come in. Again, whether it's on the same platform or if you don't want to have all these siloed islands, you'll start to look at, interoperability, like having a cross-chain settlement solution where asset is moving on one place and cash is moving the other. And that's, what we started to see more interest from companies come in. And then, I think that then naturally just leads to more client adoption. All right. We've seen that growth. The regulatory push has helped it. And, I really believe that next 2 years will be a very pivotal years where we'll start to see more clients, not only just experimenting, but actually embedding some of these use cases into their business processes.
Thanks, Alicia. Let me just, I think it's, let me just try to see some of the questions which have been asked by our listeners. One from Peter is Prashant and HSBC team also getting involved in CDBC, or is more of a wait and see? I think Prashant had to leave, but Prashant did mention a couple of times about CBDCs that during the development of their products, they're keeping an eye and also leaving this options for the future. So I would fairly think that they would be keeping an eye on the CBDCs and its development as well. The next question is...
Ash, I can probably give you my spin on CBDC because it's...
Yeah, sure. Feel free to jump in.
And I have a maybe slightly divergent view of that, in that it's great if we eventually will have CBDC. Of course, it's essentially allowing you to again increase automation and efficiency around central bank payments. But as Alicia earlier said, like most of the economy today runs through commercial bank money, right? So I would almost say, in terms of priority, that's actually more important to get on chain. And then, there's ways how you can essentially work with traditional central bank money, right? Most of the central bank systems are real-time gross settlement systems already, so you can settle in real time. You cannot do it sort of, atomically with your digital cash, commercial bank money, but you can still use it to, for example, balance out the risk exposures if your commercial bank exposure gets too high. So I almost see it as, yes, it's great if we have it, but it's not a prerequisite to get to most of the efficiencies that digital commercial bank cash can and will provide.
Okay, that's a very good insight, actually. Next question is, keen to understand what kind of underlying data infrastructure is best practice. For example, is an RDBMS ever getting, sorry, it just moved, ever getting involved here? It's more about, I think, databases, but I think when you are building these systems, there would be activities on the on-chain, and there would be a lot of activities on the off-chain as well. I think traditional technologies would always come into picture along with blockchain. So some of the activities, what you would do would be just on the blockchain, but let's say KYCs and other activities which you would do is not on the blockchain, but you would put that data onto the blockchain. So is it fair to say that those traditional technology would still exist?
I can come in there. That's right.
Yeah.
So from what we see, absolutely yes. Like it's very uncommon that when we are building something for a customer, we will use exclusively blockchain only tech. Almost always we are involving like a large suite of tech, which includes centralized data stores, centralized compute systems as well. One of a kind of a emerging pattern we're seeing at the moment is quite an interesting one. It's kind of like similar to blockchain, but not really like a fully decentralized system whereby you'd have some kind of central data store that's tracking something. For example, let's take a supply chain, and you've got one large supplier who is logging, inbound and outbound products from some kind of data store, but they need to report on that. What we find is, provided people trust that at the point of like data creation, that company is trustworthy, they can then kind of output their logs from a database or output the hash of the data and store that then onto a blockchain. So retrospectively, people can verify that when they go back and look at that data, they can see that it hasn't been changed. So we can have proof that a record has not been tampered with in what would become a much simpler technical architecture, because you do not need every single participant to like run a copy of the ledger, for example. You just have one lookup place. And what's also interesting is that you can rely on public chains to host this hash data in theory as well. So yeah, long story short, there's a big mix of different technologies used. It's obviously very, very use case dependent.
I would even add to that, Sam, that blockchain is not like a separate thing from databases. Blockchain is something that sits on top of databases. So our ledger, each individual node has a relational database underneath. The blockchain, in the sense, is just the fact that through the synchronization protocol, you're synchronizing multiple instances of databases, which are ultimately, or can be, relational databases. And I think it's quite an interesting way to think about the technology, that you could think of it as being essentially just the next evolution of standard database technology, which is, it's a process sitting on top of your traditional database, but that makes sure that your records are in sync with all the other participants that you're dealing with, right? So in a sense, yes, the database technology hasn't changed, but it has gotten an additional synchronization or consensus layer on top. And that's what's so powerful, because the way we today synchronize databases is phone, email, messages, and then reconciliation. And that's fundamentally what blockchain or distributed ledgers try to solve here.
Thanks,
Yeah.
Ugo. I'll just pick some questions randomly, without any bias. One of them is, what are the big opportunities for fintechs here? What do banks need help with, or are bigger opportunities in competing with banks? So is there any opportunity here for fintechs as well in this space, while banks investing a lot of money in this space alongside?
Oh, I think definitely, yeah. Because fintechs are by design more nimble, more fast. They can move at an entirely different pace to a bank, right? And there is a number of different utilities that all of the banks in a given network will ultimately need, right? And oftentimes banks don't even have too big of an appetite to build everything in-house. So rather, as a fintech, if you can get maybe a handful of banks to start building a certain use case, then you also remove, I guess, the concern of I don't know, BNP not wanting to join the Goldman's platform because they're a competitor, right? So I think there's a good place for fintechs to position themselves and to also just outpace some of the maybe slower moving banks.
Yeah, no, and
Okay.
I
Yeah.
would also definitely agree that, right, in the payment space alone, right, when we look at the traditional market, we're seeing a lot of disruption by fintechs and startups in this space, where you have banks being large organizations, but you have the fintechs looking at one part of a very big process and looking to do it really, really well. So yeah, I wouldn't be surprised to see that evolution as we're going into the digital asset space, where fintechs might start to do something similar.
And there is a question. Thanks, Elisa. There is a question from someone who wants to pursue their career in DLT. How do they or DLT blockchain space? They have been in the payment. How do they do you have any advice for them? How do they start, and how do they lean on to that particular role?
All right, I can kick that one off. So yeah, I think what I found, especially in the blockchain and digital asset space, it's a very relatively new area when you compare it to some of the other technologies and industries. And I think that's where you have a really welcoming community of people who are very smart, and also people who are very willing to share. So some of the advice based on my personal experience is actually reaching out to people, whether it's acquaintances or attending events that is covering this space, and just talking to people, having a conversation, understanding what they're doing, getting and because it's such a big space, it's also trying to understand where in this space you want to specialize in and focus on. And then that also helps you narrow down as you're thinking of moving into digital assets.
Thanks. Very well covered.
And I would probably add to that if you're already in the financial sector, then just think about how would you apply that technology, because you know already about all the problems that exist in today's world and in the industry today. So how would that technology be applied there? And that sort of equips you with then approaching companies, approaching people with sort of your way of thinking about it, and that might just give you the entry point.
Very good point. Gog, I want to ask you over here related to this question. Someone sitting in the finance space in a particular domain, and they want to apply this, let's say explore how the blockchain or DLT can benefit and put together a business case. So I want to ask you, you have this Daml Finance. Can you touch base on that as well? Like how someone like that person can leverage that to build a use case?
Yeah, certainly. So I think when trying to identify the right problem to solve, and we do that a lot, by the way, with our customers, there's still the saying blockchain is sort of a solution looking for the problem, but it is about finding the right problem to solve and to employ the technology the right way. And the way I think about it is that you look at a specific business that you currently have, and you think about, where does the data go? Where is the data being used? And who are the parties that are interacting with that business? And I can almost guarantee you for almost any type of business that it's multiple parties that are spanned across multiple companies that need to somehow agree on certain data and interact with it, and all have the same record within their own databases, right? And that's almost the canonical problem to solve here. It's ultimately the having the data synchronized by design. There's no way that a blockchain can sort of go out of sync, right? And then the interaction with that data, so the workflows, the business processes around that. And that's ultimately where Daml Finance specifically helps you with regards to putting assets onto a chain. And in particular around the very complex processes around lifecycling those assets and basically servicing those assets, because that are, again, inherently multi-party processes. And what we've seen in the tokenization space so far is pretty much everyone taking the first step, which is bring the books and records onto the chain to facilitate settlement, right? But if you're talking about, let's say, a complex structured node, that's not the complex bit. That's not where the cost is incurred. The cost is incurred by, managing the life cycle throughout the lifetime of, let's say, 10 years that the node might have. That's a continuous cost that you have to account for upfront, so that your price will sort of factor that cost in. And by being able to model these much more complex financial instruments, and then modeling and automating all of the life cycle events that can happen, that's really where I see ultimately the business headed, and where you then reap a lot of the benefits of the underlying technology as well. And Daml Finance as a toolkit provides you with all that off the shelf, so you don't have to build it yourself, essentially.
Thanks, thank God. I have two more questions. I know there are a lot of questions being asked by our listeners, and I assure you, we would take those questions and send it to our panelists offline. And later on, I think Joe from FinTech North can coordinate and reply back with the answers for those. But I think those questions would require a little bit more, time to. So in consideration of the time, I would ask two more questions. One to Elisa, which is asked by Junaid, who wants to know how the JP Morgan's tokenized deposits. How would you compare JP Morgan's tokenized deposits with synthetic CBDCs?
Yeah, no, and I can answer that really quickly in terms of time. But yeah, I think with synthetic CBDCs, how I think about them is that they're more of a stable coin like structure, right? Where you've got it being backed by reserves. And the way we think about deposit token construct, not just within JP Morgan, but as generally as we think about that commercial bank money evolution, is we are really taking that account form, the deposits in an account form, and representing it natively as a token on the blockchain. So for all intents and purpose, when we look at that deposit token, it would, be similar to how clients or companies interact with deposits today, right? When they're looking to make payments, make payments, whether it's for treasury flows or settlement, especially in that DVP space. And that's where the way we look at the deposit tokens is, it's issued by an issuer, so that you have anyone who's holding that deposit token will have a claim against the issuer of that token. So really, really quite different in that sense.
Thanks, Elisa. One for Sam as well, from Junaid. He asks, wouldn't infrastructure providers such as Google are in great place to develop connections, bridges between different blockchain? So this is, I think, to solve interoperability. Is there any initiative within the Google to tackle that?
Yeah, good question. So I think probably I would say to that, just because technically we could do it, should Google be the people that are right to do that? So yeah, obviously we do connect with a lot of different protocols. Our engineering team work with them. Some of them we support in our managed services. I just think that I don't think we want Google to cannibalize the entire space. And I think what's better is if Google enables people to build on top of Google Cloud. So, let's enable, some Web3 native company to build that on Google Cloud, and we'll help them do that. They can use our fundamental components, like they can use our blockchain node engine or something to access the different networks. But then it would be some bespoke service that they would build on top of Google Cloud that would enable that. I think in terms of any kind of aggregation or kind of like connectivity between chains we would do would be just on kind of data set level, right? So within our blockchain analytics product, we've got, like 30 data sets at the moment, which are currently independent data sets from different chains. I think, this is obviously roadmap, but I think within that space, being able to do ask aggregated questions, like how many NFTs have been sold across all of these networks, or something like that, would be quite a beneficial thing, rather than a sort of a direct networking integration, more just kind of like data aggregation that kind of sits above.
Thanks, Sam. So again, you initially mentioned that Google's stance would be unopinionated, and you would provide tools and toolkits which would support your journey on the DLT on a Google Cloud network, which is again, you are reinforcing that.
Yeah.
I think it's time for me to actually try to conclude what we have discussed, and correct me if I'm wrong somewhere, or you want to add anything if I have missed anything. So for me, as per our discussion, doing tokenization, digitalize the complete value chain, bring in more liquidity. You have opportunity to expose those financial instruments to new customers. Obviously, it comes with its own challenges, regulatory challenges, which you need to comply with. Alicia also mentioned that importance of atomic settlements, which are quite key in, especially cross-border payments and in the payment network, and emphasizing on the fact that different banks and institutions can form a peer-to-peer network, which would facilitate these kind of transactions, and also blockchain-based cash accounts would be possible. Apart from this, we also mentioned, Sam specifically mentioned the need of those audit systems for the third-party data in this value chain or in the DLT blockchain space. And God also mentioned that the networks like Canton Network from Digital Asset and Damel Finance, those kind of tools which are which help customers achieve that DLT journey much quicker. There are still some challenges. I would say interoperability would still be you would be keen to explore, and I think this will develop in future. Much more collaboration is needed, and everyone is keeping an eye on CBDCs. But development on the CBDCs space does not hamper the development in the banking space. Is there anything I missed or you want to correct? Okay, thanks everyone. I think we stayed a little bit longer than we planned for. So thanks again for the panelists to take part in this fruitful conversation, and hope next year we would see much more use cases live in the DLT and blockchain space. Thanks. Joe, do you want to say anything?
Well, I just want to say thanks to you, Ash, really, for moderating a really insightful discussion. All of our speakers, you've been brilliant, and well done to Sam for reacting live to the fire alarm. Always the way with these things. Thanks to our community as well. We had some great questions in there. We couldn't get to all of them, but there were some really good, insightful questions, and I've made a record of them as well, so we can connect some of you guys with our speakers as well to finish off that discussion. I wanted to kind of come in right at the end and just ask, are we looking at the next generation of finance here? Just relating it back to that initial question posed by the webinar. But Ash, I believe you kind of had the final say there and sum things up really well. So unless any of our other speakers want to jump in on that note, yeah, I'm happy to wrap things up. Awesome. Well, it's been a pleasure bringing you all together virtually once again for a webinar. We'll be producing a write-up, and we've recorded this webinar as well, so we can share it not only with the attendees that were on the webinar live, but actually share that with our community of over 5,000 people and beyond as well. So a huge thanks to all of our speakers, to all of you for joining the webinar live, for our partners and sponsors, GFT, and to Ash for doing a great job for facilitating this. And yeah, we'll look forward to seeing you all again soon, either virtually on screen or in person, face-to-face at a FinTech North event next year. So yeah, take care and thanks, guys.
Thank you.
Thank you.
Thanks, everyone.